Hello and welcome to the channel. Today we will talk about cryptocurrencies and how they work. Cryptocurrencies are a topic of great interest nowadays, so it is important to learn more about them. What are cryptocurrencies? Cryptocurrencies are a form of decentralized digital money based on blockchain technology. This technology allows transactions to be recorded and verified in a decentralized computer network without the need for intermediaries such as banks or governments. Examples of popular cryptocurrencies are Bitcoin, Ethereum, Litecoin, Ripple, among others. How do cryptocurrencies work? Cryptocurrencies are a form of digital currency that use cryptography to ensure the security of transactions and control the creation of new units. Cryptocurrencies operate on a decentralized network, meaning they are not backed by any government or centralized financial entity. Instead, transactions are verified through a network consensus process. Each transaction is recorded in a public ledger called the blockchain, which is constantly updated as new transactions are made. The blockchain is an immutable and transparent record of all transactions that have taken place on the network, ensuring the integrity and transparency of the network. Cryptocurrencies also use cryptography to ensure the security of transactions. Each transaction is encrypted with a unique code called a private key, which only the account owner knows. This private key is used to digitally sign the transaction, ensuring that the transaction is authentic and that no one else can alter or forge it. One of the most important characteristics of cryptocurrencies is that they are limited in quantity. Most cryptocurrencies have a fixed maximum supply, which means that only a certain number of units can be created. This ensures that the supply of cryptocurrencies will not inflate and that their value will not be diluted over time. Cryptocurrencies can also be used to transact anonymously. Unlike traditional banking transactions, which require the disclosure of personal and financial information, cryptocurrency transactions do not require the disclosure of personal information. This allows users to maintain their privacy and security while transacting over the network. In short, cryptocurrencies operate on a decentralized network and use cryptography to ensure the security and integrity of transactions. Transactions are recorded on a public ledger called the blockchain, which is constantly updated as new transactions are made. Cryptocurrencies are also limited in quantity and can be used to transact anonymously. As cryptocurrencies continue to evolve and gain acceptance in the global economy, they are likely to continue to play an increasingly important role in financial markets and online trading transactions. How are cryptocurrencies obtained? Cryptocurrencies are digital currencies that operate on a decentralized network, meaning they are not backed by any government or centralized financial entity. Instead, their value is based on market supply and demand, and they are created through a process known as mining. Cryptocurrency mining involves the validation of transactions on the network of the cryptocurrency in question. Miners use their processing power to solve complex mathematical algorithms and confirm transactions on the network. In return, they receive a reward in the form of cryptocurrencies, which they can store or sell on the market. Most cryptocurrencies, such as Bitcoin, use an algorithm called proof of work, POW, to validate transactions on the network and reward miners. In this process, miners must compete to solve a complex cryptographic problem using their processing power. The first miner to solve the problem receives a reward in the form of new cryptocurrencies. However, this process requires a large amount of energy and processing power, which can lead to a large carbon footprint and increased production costs. In addition, POW can be vulnerable to centralization, as larger and more powerful miners may have an advantage over smaller miners. Other cryptocurrencies, such as Ethereum, use an algorithm called proof of stake, POS, to validate transactions on the network and reward miners. In POS, miners must prove that they own a certain amount of cryptocurrencies to participate in validating transactions on the network. In return, they receive a reward in the form of new cryptocurrencies. This process requires less energy and processing power than POW, which reduces the carbon footprint and production costs. In addition, POS is less vulnerable to centralization, as miners do not compete with each other and there is no inherent advantage for larger miners. In short, cryptocurrencies are obtained through the mining process, which involves the validation of transactions on the network of the cryptocurrency in question. Miners use their processing power to solve complex mathematical algorithms and confirm transactions on the network. In return, they receive a reward in the form of new cryptocurrencies. Although the mining process can be costly and energy-intensive, cryptocurrencies are still an interesting way to invest and participate in the digital economy. Investing in cryptocurrencies has become increasingly popular in recent years due to their high volatility and profit potential. But why is it important to invest in cryptocurrencies for the long term rather than treating them as a short-term investment? First, the volatility of cryptocurrencies can be a blessing or a curse for short-term investors. While it is possible to make quick gains in a short period of time, it is also possible to lose a lot of money in the blink of an eye. On the other hand, investing in cryptocurrencies over the long term can provide more stable and sustainable growth over time. Secondly, the underlying technology behind cryptocurrencies, blockchain, is becoming increasingly important in various sectors, from banking to logistics. Investing in cryptocurrencies for the long term allows you to benefit from the long-term growth potential of blockchain technology and the cryptocurrencies that use it. Third, cryptocurrencies are a relatively new investment and, as such, have not yet reached their full potential. As more people begin to adopt and accept cryptocurrencies as a form of payment, the value of these digital currencies may increase significantly in the future. Finally, investing in cryptocurrencies over the long term can also help you diversify your investment portfolio. Investing in different assets, including cryptocurrencies, can help you reduce risk and maximize returns. Investing in cryptocurrencies over the long term can provide a number of benefits, from more stable and sustainable growth to exposure to cutting-edge technology and portfolio diversification. However, it is important to keep in mind that any investment carries some risk and that research and financial advice are essential before investing in any asset. In conclusion, cryptocurrencies are a form of digital currency that operate on a decentralized network and use cryptography to ensure the security and integrity of transactions. The blockchain is an immutable and transparent record of all transactions that have taken place on the network, ensuring the transparency and reliability of the network. Cryptocurrencies are also limited in quantity and can be used to transact anonymously. As cryptocurrencies continue to evolve and gain acceptance in the global economy, it is important to understand how they work and how they can be used effectively. It is important to keep in mind that cryptocurrencies are highly volatile and can experience large price fluctuations in a short period of time. While cryptocurrencies have some risks, they also have the potential to change the way we do business and conduct financial transactions. The underlying technology of cryptocurrencies, such as blockchain, also has the potential to have a significant impact on a variety of industries and sectors. Ultimately, understanding how cryptocurrencies work can help us make the most of their potential and minimize the risks associated with their use. By learning more about cryptocurrencies and how they work, we can make more informed decisions about how to use them in our personal and financial lives. Thanks for watching this video. I hope you found the information useful and entertaining. If you like this video, be sure to like it and subscribe to our channel so you don't miss out on future content. See you in the next video.